Alrighty, traders, it is Thursday, August 1st, 2024. We are 7 months down in the year, 3 months to go, and that's it. But it's another red background day today, so we'll put the red background here, although it all depends on what you're invested in as to how your day went today. So we're going to talk more about today's action. We'll talk about what happened with Amazon and Apple after the bell. We'll talk about a little bit of the economic reports that were swirling around today that made some changes in the markets, and we'll talk about the trades that we put on and took off today, which we did some active trading today. Active is a relative word, but our lazy man's way of trading, we put on some trades and we took 4 trades off today. So great day from a P&L standpoint. I'm going to wrap up the month of July with you as well. So it's a jam-packed next 20 minutes or so, 25 minutes. We'll try to keep it moving for you so you don't have to stick around for forever, but I got a lot of stuff to share with you today. So let's get into it. And let me first just share screen, and let's just take a look at what happened in the markets today. Up here, we've got Amazon up on the screen just because I want to touch base on Amazon and Apple. But Amazon, as you can see, is down pretty decently after hours. And right now it's about 7:46 p.m. Eastern time. So let me get off the screen so you can see everything. But Amazon's going to be down about 14 points in the morning. So almost a 10% haircut. Right now, about 8% down. Been looking just kind of wobbly here anyway. All the momentum's been down on the weekly. The momentum's been trying to recover a bit on the daily here, heading into earnings, but again, not a great earnings report tonight on Amazon. So overall, they had an earnings that I think didn't turn out so well, and revenues didn't turn out so well, and they also lowered guidance. So had a revenue miss, earnings beat, revenue miss, and they issued some pretty disappointing guidance going forward. So not great stuff from Amazon. It's certainly weighing on the market in after hours, which is down, about 0.27%. So weaker than expected revenue. Cloud business was good. Advertising came up short, but overall, excuse me, I have this cough. I'm going to try to make it through tonight. Web services were just a fraction ahead of where they were, but the forecast was down. So not great, and not doing great in its core retail business. Competition from like Temu and Shein, they're starting to creep up and take some share from Amazon. So its retail unit not doing as well as some of the other parts. And then Apple coming out right behind Amazon tonight. Now Apple's up just fractionally. It's up $1. Quarterly earnings tonight, sales rose like 5%. So over expectations, I believe. So or their sales rose 5%. Just double checking here. Earnings per share was a beat. Revenue was a beat. iPhone revenue was a beat. Mac revenue pretty much in line, slightly short. iPad revenue was a definite beat. Wearables, home accessories, definite beat. Service revenue, a beat. Gross margins, a little bit better. So overall, it was a pretty doggone good quarter for Apple. And I think that's a pretty good sign for the market. So Apple up, Amazon down, excuse me, after hours. So maybe they're going to cancel each other out. We'll see what happens. Also, if we take a look at some of the other news from earlier in the day, and I don't want to get too bogged down on news, but today we had unemployment claims, which rose. So unemployment claims rose, which is good if you're expecting the Fed to cut rates. You want to see unemployment claims rising, which is a sad thing. But manufacturing PMI came in weaker than expected. So just a little, some mixed signals out there. Tomorrow, we're going to be looking at non-farm payroll, unemployment rates tomorrow, and see how those go. Will those affect the market overall? If we take a look at ES today, we closed down at a place that we haven't seen for roughly, I don't know, 24 hours. Okay, so we opened lower than we closed yesterday. So overall, all you did was erase yesterday's bounce, and you're right back to where you were. And we're right back at the same level we were at back on 7/24. So we've been a whole week, 1, 2, 3, 4, 5, 6, and now, heading into tomorrow, we're at the same levels that we've been at for over a week now. So if you thought that the world was ending, well, we were only down 1.4% at most on SPX today. We're right at this trend line. We're right hanging around the 50-day moving average on the daily. We're not even close right now to the 50 here on the weekly, and we're still well above support and above the 21 EMA, which is all still rising, even though you've got some weaker technicals. I think it's just something to keep an eye on here. Are we out of the woods, or is this going to continue? Nobody knows yet, but this would not be the worst place to just see some consolidation and then another move higher, or maybe we start the next leg lower. But market has been consolidating for about a week now. All right, so we'll keep an eye on that. The daily chart looks, less exciting here than the weekly, but the weekly is starting to roll over. So I think we have to keep a little cautionary on there. Now, the VIX itself cranked up today a little bit to the 18, almost 19 range, 1859, 19. VIX just getting its mojo on a little bit, but if we take a look at the VVIX, so the volatility of the VIX here, if you look at where we get to these extremes, somewhere around that 110 to 120 level, anywhere in there typically marks some tops of the volatility beat. Now, I mean, we've gone up as high as 140, but really just around this 110, 115 mark, and then we revert. And then we go up to 110, and then we revert. Okay, well, guess where we were today? We ran up to about 110. We backed off a little bit. We'll see where things go tomorrow. But the volatility of the VIX hitting some highs today, not saying that there's nothing to worry about anywhere, but it's certainly something to put in your back pocket and look at. We talked, if you watched the video with Tony and I yesterday, so the Tom and Tony podcast, if you watched that, we did talk a little bit about SVXY, which is the short volatility index here. Well, you would expect that, if you're short volatility on a day where volatility is cranking up, you're going to hit some lows. Now you've hit, or you're going to drive it down. You see, every time this thing drops a good fraction, then it rebounds, and then it drops, and then it rebounds. Well, this is a pretty good size drop, even though it's just been slowly climbing here. It's getting towards a little bit of this oversold level where typically the SVXY bounces. And if you followed Tony's explanation yesterday, he loves to sell some puts on this. And both he and I today were looking at selling puts around the 55-ish mark. So anyway, something to keep an eye on. I want to see how things shake out tomorrow, and then I may make a trade on this. But I think we're getting to some overdone levels on that. So just kind of confirming things as we go. Taking a quick look here as well at a couple other things that were happening on the day. Oil gave back some of its massive bounce from yesterday, but it only retraced about half of that today. Not a big deal. I think oil continues to look like it's making some sort of improvement here on both the weekly, and more importantly, the daily here. We'll see what happens with oil, but if oil can stabilize here a bit here, I think it's had a pretty rocky go at it. So I like where oil is right now. So I think oil is a good place to be if we're taking a look at a few potential opportunities here to sell some puts or some 112s on oil. I loved the bounce yesterday. I don't mind the retracement today. Let's see what tomorrow brings as MACD and RSI continue to try to come off of their lows here on the daily, and really just kind of stabilizing here on the weekly. Let's see if we can hang inside that triangle, but I think that sets up. You know that I'm bullish on bonds, and this certainly played out here today, the last 3 days. Big move yesterday, breaking above this resistance line, follow through today, and yet a little more follow through in the after hours here. So certainly bonds starting to get their mojo back and get cranking. We're actually overbought on bonds on the daily, but we're not there on the weekly. So I think this is just the beginning of a bond move that we have been waiting for a month or two now, that I've been prepped for. We took advantage of it today as well, and I'll talk about one of the trades that we closed within 24 hours, making 66% return on bonds. All right, gold. What's happening in gold here? Big move this week on gold, breaking out of this really long-term consolidation here. Had a little bit of a breakout previously, came back down, hit the 50, and then off and running to the upside. Looks like a bit of a squeeze breakout move to the upside. Today was pretty flat on gold overall, but nothing major on gold, just continuous improvement on gold. So like where we are on gold, I think it just needs to just hang in here. And if it doesn't get too carried away, we'll actually move this price level up. So it's a new all-time high here on gold. All right, let's take a look at the Aussie dollar. I hate when Toss is doing this. It's a pain in the butt. All right, so Aussie dollar, it's just been oscillating in this range. It goes a little bit above the 50.21, a little bit below the 50.21, a little bit above the 50.21, a little bit below the 50 and 21 EMAs. The weekly move is definitely down on the Aussie dollar. Everything rolling over on the weekly, so definitely some bearish move, but we have seen this play multiple times already. This has been a pretty substantial selling move for 3 solid weeks now. You've watched 6A just dropping like a rock. However, MACD is trying to make some improvement, and RSI is at oversold levels. So I would expect, and we're also outside the 3 ATR band here on the daily. So I would expect that we'll see maybe a little bit of chilling out or consolidation here. I don't know. Are we, back here we had 1, 2, 3, 4, 5 straight weeks of a down move. In 6A back here, 1, 2, 3, 4, 5 straight weeks of a down move. So it can still keep going. We'll see what happens. But overall, nothing to really do here. It's not a bad anything. Not a play for me right now. This is off the table. We're sitting on a 6A strangle, and we're fine there. And then also on the euro, same type of a thing. We've been in this trading range. We can probably get rid of this thing now. But we've just been in this trading range, moving around, moving sideways. A little bit of support area in here. Came down, bounced on it yesterday, after hours. Today, we're right at it again. Definitely showing weakness for the most part on the weekly, but nothing terrible. We're still very close to the 21 and the 50. And then we're still very close to the 21 and the 50 here. We were just touching the 50 yesterday, and we're just a fraction. And 2 days ago, we were at the 21, which is, they're all consolidating, and we're all right there. I do like this setup here. I think 6E still gives you strangle opportunity. So I think it's strangle worthy. All right, on the NASDAQ today, tech stocks taking an absolute beating with the exception of Meta, which had a fantastic almost 5% up day. But the NASDAQ taking a beating. So 4 weeks of downward movement. This thing is definitely putting some pressure on people here. And is it overdone, the move overdone? I don't know. But if you look where we are, just like the SPX, Okay, even though it's a big move down today, NDX was down, the NASDAQ was down 2.5% roughly. We're still at the same level we were sitting at a week ago. So yeah, we've been up, we've been down, we've been up, we've been back down. We're just sitting sideways in this downtrending channel. So overall, I don't think it's the worst thing in the world where we're sitting right now. Maybe a little bit of a megaphone type of pattern going on, but you're just sitting inside of this. So volatility is just picking up on the NASDAQ, and bearish trend all over the place here. RTY took a beating today. We looked at this ascending triangle that if we broke out, I think it could be a good buy. Today, absolutely got hammered, which is fine. We're not in anything here. And this is why we wait to see what's going to happen. We exercise patience and discipline, and we don't just chuck trades on. Okay? It didn't get a break or confirmed breakout here. It tried, okay? The other day, finished inside. Today, broke down to the bottom. So really this ascending triangle is no longer a go. It's now a little bit more of, a consolidation area. So we can draw this line. In fact, let's take these off. And I kind of like the fact that I like drawing these little rectangles here because I think they're visually a lot easier to follow. So now we're in this volatility box that we've been in for 3 weeks now, up, down, inside of this trading range that goes from, I probably drew it, it's a fraction big, maybe it's more like this. So we're really around 2190 to around 2290. So this 100-point trading range we've been in for 3 straight weeks now. A break one way or the other would make some sense, but you're way above the 21, way above the 50. You got overextended, okay? But this break here told you the magnitude of this break. So here it was roughly what, 2020 to 2160, something like that. So 2020 to 2160 is about a 140-point range. So 140 points on top of this would put us at 2300, which is exactly what we got to, and that's where the extent of the move went. So we got the break of the box. We rose the exact same amount as the width of the channel that it was in, and now we're just taking a break and consolidating. I like it here. I think it's going to give us some opportunities to potentially get back into RTY. It's not really a strangle or anything for me. It's too far away, but I think this thing is setting itself up for potentially a nice 1-1-2 play or something like that. We're going to have to give it a little time. There's no hurry, no rush to jump in and just start winging trades right now. Plus, you got to be a little mindful of your buying power. All right, so that's a good sense of what the market has done. We also played some 10-year notes. So we played the 10-year notes here. We saw a rising wedge. We broke out of this pattern. I think this is a really bullish looking chart. I love the 10-year note. I think I love it more than the 30-year bond. Right now, it's a little more rate sensitive, being a little bit closer to the front end of that curve. So I love this move. Now, yes, we're overbought, but we've got the squeeze fired. We've got RSI has been rising. Now it's overbought. MACD rising. Is this the end of the move? It might be temporarily. On the weekly, I think the move has more to go. So if any pullback in here, that puts us back down close to the 21 or maybe inside of this range here, I think it's going to give me another opportunity. But we did get into a notes trade yesterday, and we took that off in less than 24 hours with a 67% win on this. So let's take a look at what happened in the account today. All right, jumping in to the main trading account today. We saw our delta move up a bit. Excuse me, about 12.15, about 0.24%. Nothing really that far out of the ordinary. We've been right in that same range now for a little over a week's time. And yeah, it's a little bit outside of the range I'd like to see it, but when the market's falling, I think it's totally acceptable. When you have 3 weeks of down move, you're going to see your delta naturally just expanding, but it hasn't expanded to some point that it's ridiculous. Okay, it's almost within our parameters, and it's just out by 4/100ths. So don't really care. All right, so theta. Now theta has bumped up a bit. You would expect that with that rise in volatility. VIX was up about 14% today to 1859. So a nice rise in VIX, a nice rise in volatility. And because of that rise in volatility, you're going to see your theta start to grow. We're sitting at 0.32. Love that. So we're generating really good theta. Net lick did drop today, so it had a pretty good intraday drop, but we didn't close anything. Nothing's even close to being closed. So we really don't pay attention to our net lick that much. Our BP usage dropped fractionally today. When you subtract our bill amount, which is a little over 12% now of our portfolio, we're sitting at 53% buying power, which at the end of the day, I thought that was pretty doggone good. There's people out there telling me that their buying power is 70, 80%. I don't know how it's that far out of whack, but ours is not. Okay, 53% buying power. We're almost at the point where we can put on trades, but considering the spike in VIX that we've had, and VIX was up again just 13% today, but yesterday, or this last week, okay, VIX has moved from 15 to over 18, almost 19, so 4 points total. It's up about 27%. So you've seen a 27% bump in VIX, but our BP, our buying power, not really being affected. The volatility is affecting some individual trades, but we're nowhere near anything to be stopped out on. All right, so let's take a look now. Today, we also booked $8,237. So the first day of August, we booked $8,200 in winners. We've already got half the month. The goal for the month is $15,900, okay? And we booked $8,000 today on the first day of the month. We could shut it down right now if we wanted to, and just cruise for a couple of weeks or so. So we don't need to do anything. We've already put in a lot of our realized. I do want to cover last month quickly with you. And last month we finished at $25,195 in realized profits. That was a 4.9% return on the month. That was by far, if you look at our whole year as a whole, last month was the #1 month of the year. So best trading month that we have ever had in this account. We have now, through today, excuse me, I apologize. We've now booked $126,000 in realized gain. Oh, I think it's fantastic. Excuse me. I may not be able to continue here, but having a great month overall. But what did we do today to get started off on the right foot? And also for the year now, through today, we're now up 30%. So 30% for the year in realized P&L, right? The net lick is up almost 20% for the year, while the S&P is up about 15%. So we've now effectively doubled the results of the S&P, and we have not even begun to realize some trap profit money, which if this market continues to move sideways or down, that's what we're heading for. That's what we're looking for, that when the market moves down, we start to take advantage of that with great trap profit. All right, let's keep rolling. Let's take a look at what we did today with the realized gains, and then we'll wrap it up for you guys and get you on your way. So what did we do today? First trade was in ZB. We closed a naked put So we had a 120-day naked put. We closed it in 21 days for almost $900. A nice 5% return on margin, 4.9%. We also closed the naked puts of a bond ZB 112. And we managed to book $2,200 on that one in 49 days, 92% premium capture, 26% return on margin. Then here's that put spread. We put this put spread on yesterday just because a 1 day in trade, booked almost $700 on that, which was fantastic. So $700 in 1 day, 66% return on capital, or premium capture, I should say, and 16% return on the margin we used. And then lastly here, we actually were able to also close a naked put on one of our long-term 112 trades. We took it out just a fraction early at, excuse me, 87% premium capture, but certainly warranted. I think we booked $4,400, totally fine. When we take a look at what we're trying to gain each month, we're really shooting for somewhere in the neighborhood of $6,400 total for the month on these. That's the expected, and we've already booked $4,400 this month on just one long-term 112 naked put closing. Now we do have the put debit spread to close, so we're still on track for what we want to do. I also do want to point out too, for the year, if you count through today, we now have won 210 of 232 trades for a 90.5% win rate. So we continue to just win 91% of the time. Doesn't matter, Strangles, 112s, ratio spreads, 0 DTE, 120-day naked puts. We're losing on hedges all the time, and that's still not affecting us. We're driving some nice bill money. And of course, today was also the bill distribution. We'll be seeing, we upped our bill percentage, as I talked about earlier. So we've upped the bill now to about 12, 13% from 10. And I think our distribution is going to be around a little over $1,000, I believe, this month. So maybe about 1,050, something along those lines. So we're going to have a great bill payout in the next 7 days. That's going well too. So again, we've already booked $8,200 here and doing pretty well. The last thing I want to share is, let's take a look. So I talked to you earlier and I gave you a sense of, and you know where our accounts are when it comes to our allocations on everything that we're running. So I want to share again my allocations, because a couple of people were really wondering, especially in our Discord group today, well, how come your buying power didn't really, the VIX is going up 15, 20% today, and your buying power not being affected at all. And I did not take off any ES trades. Now, I did take off a few other trades, and I did put a hedge on today too. So I put another 14 DTE hedge on today. That always helps. I took some trades off. I think that combined with my allocation is pretty sharp. So when we take a look at our allocation, this is what my trading account looks like right now. 31% of my buying power is in ES, 26% is in oil, 11% is in bonds, and then you've got 5% in gold, 5%, 4% in the Aussie dollar, 3% in the euro, and 19% of our buying power is being used for BIL, the Treasury ETF, to generate cash. So when you look at these, I mean, I'm not sitting on 100% ES or anything close to that, which is what a lot of people trade. And there's nothing wrong with that. I like to spread my trades around. And so I like to put on a good number of different types of strategies using different types of underlyings. Okay, that keeps my BP in check. We were able to put on a new long-term 112 campaign trade today. We were able to put on a new hedge today. We took off 4 winning trades today. So even though the screen behind me is red for the market, the screen behind me really should be green for us because we are winning today. So our profits are up. We've got half the month already booked on day 1 of the month. All right, I'm going to wrap it up for you. If you found this helpful, please click the like button down below. Share with anybody that you think this could help. If you are not a subscriber to this YouTube channel, please go ahead and subscribe. See what we're doing. I'm going to keep sharing stuff with you. We've got some really cool new stuff coming out. Stay tuned. Just keep tuning into us. And if you really want to follow the insider scoop and see what I'm trading, watch me trade live, answer questions all day long, okay? Build the knowledge base for people. We want you guys to learn to fish for yourselves. We want you to be more successful in life and in finances, and we're going to help you get there. Come and join us in the Discord if you want. Have a great rest of your evening. We'll see you tomorrow, folks. Bye-bye.